Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Monday, and this is the 21st of August, solar eclipse day 2017, about 3:15 p.m. Central Daylight Time. As you all know, I took Friday off. I played hooky, enjoyed my day. I worked like a madman at my house and had to get things done. We're all at that point. You know, the kids are all going back to school already. I see in Chicago, all the back-to-school sales are on. The schools are starting to get themselves spruced up and ready to reopen. So it's like a season coming for us. Now, what happens is at the end of August, things often get a bit quieter. In this case, I don't know that that's what's going on in the metals because this gold market is acting better and better. Now, it acted terrible, in my opinion, on Friday. Gets up to 1306 and closes lower on the day. So is this bounce really anything more than maybe it overdid the break late in the day? Don't know. President Trump is speaking tonight. He's supposedly going to talk about Afghanistan, a very unpopular war, I think, in America. Again, he'll pick one of these things that doesn't do him that good. But, you know, he speaks off the cuff, so we don't quite know what he's going to say. Gold still getting a bit of a bid because South Korea and the U.S. began their, I think it's 11 days of war games. And, of course, North Korea hates that. But is anything going to happen with over 60,000 troops practicing for war with them? I doubt it, but it's a small amount compared to the amount of troops that could be put up. We haven't heard anything bad yet other than it's reckless behavior on the U.S., and it is what it is. So let's take a look at the gold. And as I pointed out before, and this is before I wasn't here on Friday, this high, and I'll back off from it just a little bit, was the next number that the market had to make a decision. Could it get up, break out of that, or is it going to come back and challenge these lows right through here? Let's call it the 1200 level. So it gets up last week, punches through, gets up to 1370. Remember, this is a weekly chart, so this isn't the December contract. It's going to be the near-term August contract. Closes lower. It's trying to make up a little bit of ground right now. Okay, but it's still very much stuck in this resistance area, and I think you'd agree with that. When we look at the December area chart of closes, you just took off, and today you get a nice close, and that's where you're going to finish, 1297.30. So you're still very much in an up thrust. When I look at the chart here, the question is, and I'll give you what's called a bad signal. Should you take out 1300 and then slice back through today's lows? That would be an ugly signal. And it could be one where you make a top out of this area. It's not something you want to see. So the market's in sort of a precarious position right here. The trend is certainly to the upside, higher lows, higher highs. I think you'd agree with that. You're over the 18-day average. When you had your bullish crossover, and I'll take you right there. I know people don't believe, well, the market might go higher. It did it all in the same day, and I agree with that. But if you really look, since that crossover occurred, the market has continued higher, and challenges back to the 18-day average have really done the job of holding. So until it doesn't do that job, should the market break down, that 1279.80 zone, that's the number it is right now at that 18-day average, is the support. Resistance is crystal clear. It's the upper Bollinger Band. Each rally up to it has been failing. In fact, as I go back on the chart, each rally to it's been failing. So why should it stop failing? Well, that's what I ask. This is not coming out of sideways action. This is a market that's been on a bend to the upside. That does not mean we can't go higher. The probabilities of staying over that are small, and then I go to momentum, and I'm overbought as can be. So no, I am not in the super comfort zone, barring some event happening that sets the world ablaze. This market's got some resistance up here. Bullish? Yes. Momentum up? Yes. But overbought at the same time. When we come to the GLD ETF, this is the large one. I keep reading the articles. The second life has come into them. People are buying the ETFs again. Global uncertainty. I mean, over the weekend, you read that and you see what's going on. But I'm also going to tell you, you got resistance. You are in an uptrend. You're not down here. You're up here, knocking on the door of good move. I hate when I'm this overbought in a market against an upper Bollinger Band. That doesn't mean the trend isn't up, but it doesn't mean as a chartist I have to like that look. When I come to GDX, overbought. We have a common theme in the metal markets. They're all overbought. Number 2, they're against the upper Bollinger Bands. Number 3, bias is up, trend is up, overbought, all of them. When we come to the gold-silver ratio, sort of flat. The market has gone from 74.99 after getting up here near 77.5. And when I say those numbers, think of a bushel basket and you got to put an ounce of silver in. How many ounces do you need to get 1 ounce of gold? Well, you needed 77.5. That fell down to 74.99, came back to 76.17, and today, well, I can take some of that out. I only need 75.91. The higher the amount of ounces, the stronger gold is in relation to silver. That's all that this tells me. When I look at silver, I'm asking what's going on. And again, I am in this ugly position of overbought. Not a trend here, different than gold. Lower low, higher high. Again, unable to burst through that upper Bollinger Band, pulled back to the 100-day average. And if I wanted to throw another line on the chart, for those of you that get my morning subscriber video, and that's my paid subscribers or you're on a free trial, the 200-day average is right at these highs. You've got an awful lot of resistance up here. It seems to be why the market is now slowed down right through here. It needs to make a decision what to do. It doesn't have to do it today. It doesn't have to do it tomorrow. But it's in the formative stage. The market that just keeps going, and I have to ask myself, is this market getting overly priced? Is the copper market up to $3 a pound? Here's what I know. If you own a construction site at $3 copper, you better have a 24-hour watchman. Because what will happen is the burglars are going to come out, and any copper you've got laying there, they're going to steal it again. You're not back down here pushing $2.25, $2.40 copper like we were. You're 60 cents higher. It's suddenly a valuable commodity. Can it stay up like this? Don't know. It's in large part because of China. Still a lot of infrastructure going on, but China's talking they're going to taper back on their credits. And if they're tapering back, how strong can that get? I don't have the answer. Here's what I do have an answer of. Just like all the other metals. Overbought, up at the upper Bollinger Band, uptrend and upside bias. Son of a gun. Summertime I hate. When we come to the platinum market, got a different type of market. You got lower highs, you see that, and lower lows. But you're over the 18-day average, so the two cancel each other out. Momentum, I'm getting hoarse, overbought. Here's your strong chart. One of the metals is strong, the palladium. Embedded reading. Lower low, higher high. Would you want to buy over the upper Bollinger Band? If you do, God bless you, because there's guys like me that are just waiting to give you that. Doesn't mean you can't go higher, but I like making bets that the market's going to go to the right-hand side of that Bollinger Band. The problem is, once you become a student of Bollinger Bands, that can climb tomorrow, price can end up higher, and you move to the right-hand side. That's why I say this is still the strongest of the markets. Agreed, it's not trending. You don't have to be on the swing line with higher highs and higher lows if you have an embedded reading. That's the strongest part of the chart, the way that I teach charting. In the dollar index, the market's in a downtrend if you believe in lower highs, lower lows, bearish. The market's going to settle under the 18-day average of closes, bearish. Momentum pointing down, bearish. What's the problem is you've got this sideways action now. You're not really going anywhere. So if you break down, I'm guessing you might make a run then to the lower Bollinger Band. If you get over 93.68, you negate the downtrend, but you don't start an uptrend because you'd have a lower low and then a higher high. Therefore, I think the bears are going to defend the position around the 93.23.5 level. They won't want to see it over 93.68, and it's a game of can they break the market down because they have control. to 92.59. They have control since the swing line is down, prices closed under the 18-day average, and momentum is pointing down. So I put that all together and say, okay, interesting day. Can the president tonight say anything to upset that apple cart? Our president can say anything at any time to upset any cart. Forget apples. We know that that's the case. So what next? And that's what we're going to wait on. Chart of the day. We come out with these. We did 2 of these today, by the way, all the time. And it's become so popular, we're going to make it a paid subscription service. You can still get it free from us for the remainder of August, see what it's all about. But after that, you're going to get a letter that says it's changing. And the reason it's changing is, number one, the amount of effort and the popularity of it. It just became very popular. Once you understand the concept is not buy here, sell there. The concept is, once a trend, be it up or down, gets going, where might that trend go for a zone to run into first resistance or first support, second resistance, second support? That's where you get these lines, first, second, third, fourth counts. You get it to the upside the same way, first count, second count, and so on. Zones that is predetermined before they get there, using many different calibers of Fibonacci, swing lines, theories, and all that we've put together. How do you get it? Give us a call. You can go to our website. You can click up here at any time that you'd like. This, if you're watching me on YouTube, you'll see the icon. Or otherwise, underneath us on some website says, click here for Ira's free offers. Do so. You'll get taken right to the page where you sign up for the numerous free offers we have. I'm Ira. You have a good day, and I'll see you all tomorrow.